Just a quick hello.
Testing. Hello.
Thank you.
Hello, good morning. Thank you.
Thank you. Today's hearing will be live streamed on YouTube. And I believe the stream has started. Good morning and welcome to the Office of Tax Appeals, or OTA. My name is Stephen Kim and I am the lead ALJ, or Administrative Law Judge, for this oral hearing in the appeal of A. Flores, DBA Rolling Tires and Wheels Number 1. A stenographer, Ms. Alonzo, is present and reporting this hearing verbatim. To ensure we have an accurate record, everyone should speak clearly and one at a time. Please avoid speaking over one another. If needed, Ms. Alonzo or I or any panel member will interject to ensure we have a proper transcription. After the hearing, Ms. Alonzo will produce the official hearing transcript, which will be available on OTA's website. OTA is not a court. OTA is an independent and impartial body staffed by subject matter experts. OTA is separate from any tax agency, including respondent, the California Department of Tax and Fee Administration. While OTA is not a court, we must still follow certain guidelines to conduct an orderly hearing and establish a proper record on which the opinion will be based. Each party will have the opportunity to be heard, so please wait for your turn to make your presentation. Please do not interrupt the other party's presentation and refrain from making any excessive noise or gestures during the other party's presentation. As lead ALJ, part of my role is to keep the hearing on track, so I may interrupt the hearing if we become counterproductive or get out of order. Before we go on the record, Appellant, do you have any questions about anything I just said?
No.
And do you have any questions, Respondent?
No question, thank you.
Thank you. Judge Wong, are you ready to proceed?
Yes.
Judge Lambert? Thank you. Ms. Alonzo, are you ready? Okay, we are now going on the record. This is the appeal of A. Flores, DBA Rolling Tires and Wheels Number 1, OTA case number 231214889. The date is Tuesday, September 9, 2025, and the time is 9:27 a.m. This hearing is being held in person in Cerritos, California. I am Judge Stephen Kim. I will be the lead ALJ for the purpose of conducting this hearing. My co-panelists, Judge Josh Lambert and Judge Andrew Wong, and I are equal participants in deliberating and determining the outcome of this appeal. So parties, let's begin with an introduction. Could you please state your name and who you represent and your title, beginning with appellant?
Name is Raul Carrega. I represent Rolling Tires 1.
Thank you. And for respondent, CDTFA?
Ravinder Sharma, hearing representative for CDTFA. Thank you.
Jason Parker, Chief of Headquarters Operations Bureau with CDTFA.
Chad Backus, attorney for CDTFA.
Thank you. As stated in my minutes and orders, the issues to be decided in this appeal are 1. Whether CDTFA timely issued the notice of determination. 2. Whether any adjustment is warranted to the measure of unreported taxable sales. 3. Whether the negligence penalty was properly imposed. And 4. Whether the failure to file penalty was properly imposed. Mr. Carrego, do you agree that these are the issues on appeal?
One of the issues is statute of limitation.
That's whether the notice was timely
Okay.
issued. Yeah.
Thank you.
So yes. Respondent, do you agree that these are the issues?
Yes, the department agrees. Thank you.
Thank you. We discussed exhibits during the pre-hearing conference. CDTFA submitted exhibits A through G. Appellant did not object to the admissibility of these exhibits, so therefore exhibits A through G are now admitted into evidence. Appellant did not submit any exhibits. As for witnesses, neither party intends to call any witnesses today. Okay, let's begin with appellant's presentation then. Mr. Correga, you will have 20 minutes for your presentation, and you may begin when you're ready.
Okay, thank you. I'd like to start off with talking about my client, the business he's in. He's been in business for many years, and he operates a tire that fixes tires, flats, and also sells tires. One of the biggest, I want to say, where they do a lot of income is fixing flats and just doing regular, maintenance on tires. Tires, there's very low margin on tires. There's so much competition in the area. So there's numerous stores that sell tires. So you can't just charge whatever you want, or perhaps even use an estimate that's national or an estimate that's proprietary that no one knows, how they come up with their self-tests. We are accusing this audit team, along with the appeals conference auditor, of superseding my client's rights with the statute of limitation and providing false reports that we don't know how they came up with, avoiding the true tax liability by bypassing the books and sort of using a side door to get to Mr. Parker and his team so that they can insert a famous case which allows them to do pretty much anything they want. I think we all know that case. I brought it up before. McGinnis and Quinn, 1950, an 80-year-old case, and I think everyone in here knows exactly what it says. And what it says is basically that the state doesn't have to use the books of the clients. They can use an estimate. And whatever estimate, the courts have found that this is appropriate. And it comes down to the shelf test. My argument is not to overturn this case. My argument is how it gets there, what the auditors on the field are doing to avoid the books, to actually go and do a field audit and audit the books. We're seeing things, and especially here, of circumventing the auditing of sales by excuses. We cannot go out there. You must sign this or else we're going to do this. You must sign the statute of limitation. They threaten you. This is what's going on. And they're bypassing auditing the books. You get it, client gets the letter, says, okay, they want to see this, this, this. And they don't want to come out there and do the audit. They want to, do their thing remotely. And so they say, this paper says, okay, we want to see a laundry list of things to do. But one of the things, we comply, but one of the things that we're saying, hey, we can't do, we're not going to, we have like 3 boxes of sales tax here, of sales orders. They want us to scan all of these. And we say, we're not going to scan all these. You come out to the field and you can look at them, or you can make copies or do whatever you want. That doesn't happen. They just say, well, fine, we're not going to do that. We're going to just issue a report. The report gets issued. We object to the report because they never audit. They just say they audit. They say we looked at this. We looked at this website. We have proprietary information here that shows that the shelf test, which should be this amount, and we we disagree. Well, that's nice. You can go to any site you want, especially when you provide the data. You can come up with any number you want. And also in this case, they use some proprietary information that no one has a clue how they came up with the self-test. So we object. We go through the appeals conference auditor, Cindy Feng, and she goes through and listens to the arguments. And our argument is, hey, there was never an audit here. So, and what does she do? She says, we're re-audit. A re-audit ruling. Why don't we get the ruling a proper ruling? It says no audit was done, and for the plaintiff. When we do a little discovery, we find many things that do not make sense. Some of the things, independence, we find that this auditor is not independent. She worked for the department for many years prior to her new position. We looked at a website of some of her rulings, and I think it's a well-kept secret of this website, disclosure.office@cdtfa.california.gov. A well-kept secret. But when we look at our discovery, we find there's never a ruling for appellant. It's either for the state or re-audit. We find this re-audit, as we mentioned in our letter, there's no audit. It's a way it's use a side door here to circumvent the statute of limitations. My client, who is being, I want to be frank here, is being cheated because they're not looking at the books. They're using a side door, a ruling, so that Mr. Parker and his audit team can insert the famous case, use the self-test. And we all know the self-test. Very popular, 80 years. It's been 80 years. And I want to say they've been applying this way too much and taking too many liberties. The liberties that they've taken is just, I want to say, bad business. Because the liabilities they come up with can be anything they want. A ruling a re-audit is a side door. It's a cowardly re-audit that breaks the statute of limitation law, opens the door so that Mr. Parker and his audit team can remind you of that 80-year-old case. And that's why we are here. And we all know with that 80-year-old case, they can do all sorts of things. And in this case, they used some proprietary self-test that we don't know. And also when they do things that don't follow GAP, simple things with sampling don't even follow GAP, and don't disclose many things that they audit. So we're here not to overturn that case, but to announce how things are going out in the field. And this is just one way. I've seen other gimmicks and other things that the field auditors have done to avoid auditing the books. We feel this is a no-change audit because you can create a self-test anything you want, and the statute of limitations have been violated. They've used the side door to bring it here and to use that famous case. So we say we are here to object to the self-test amount and no taxes owed by my client. Thank you.
Thank you. Do you have any arguments specifically regarding the negligence penalty or the failure to file penalty?
My negligence that there was no audit done, so there's no findings, and there's no penalty since there's no tax owed. You can create anything, so yes.
Okay, so it's not, your arguments are not specific to the penalties, but that there shouldn't have been any additional tax
There should be no tax.
There should be no tax.
And the penalty is from the tax, so zero tax, zero penalty.
So you're not separately arguing that there was no negligence or reasonable cause to abate the failure to file penalty. You're saying because there's no tax, the penalties should drop off as well?
Yes, that's what
Okay.
I'm saying. I'm ignoring if there is, I'm just saying no tax, there's no penalty.
Okay, thank you. Judge Lambert or Judge Wong, do you have any questions for Mr. Correga?
I have no questions at this time.
Judge Lambert?
I had one question, I think, Mr. Correga. Were you saying that you had your client has invoices, but they weren't provided because they didn't want to scan them?
No. I'll give you more detail. This is what happened. Originally, they were going to come out and look at the invoices, and then the field auditor said her supervisor wouldn't let her. So, they never came out. So she actually did that test, and then we object. Then they came back and asked us for a sample. We gave them a sample of 10. They didn't like what they saw, and then that's, So we felt it was just a setup. They never cared to look at the sales tax. We gave them a sample. They didn't like the gross profit what the gross profit was and what it was. And then they just did the little thing. And I asked, how'd you come up with that? And she says, proprietary, and then, that's why we are here. And then as we examine more as to what took place, all this is why we're here, saying that it was purposely ignored.
Okay, thank you for clarifying.
Okay.
Also, Mr. Correga, can you clarify your argument a bit more about the statute of limitations having expired?
Yes, the statute of limitation is 3 years. So the auditor issues a report, and let's say it's like 2 weeks before, it would expire when you take the first quarterly report. So I think they were looking at 6 or 7 reports, but they were looking at a total period. So when that first period comes in, it's 3 years, the statute of limitation, 3 years. And saying you're going to audit, I'm saying it doesn't say that counts. If an audit is when you actually start the audit, and they started it after the statute of limitation, asking for and then with this re-audit confirms that no audit was done.
Okay, thank you. Okay, let's move on to CDTFA's presentation. You will have 25 minutes for CDTFA's presentation, and you may begin when you're ready.
Sure. Good morning, judges. And before I start, I just want to apologize. I have little itchy throat, so I may stop a little bit in between and take a sip of water. I hope it's okay with you.
No problem.
Thank you so much. Good morning. Appellant operated a retail tire shop in Harvard City, California since May 2015. The department performed audit examination for the period April 1, 2018 through December 31, 2020. Appellant reported total sales of around $2 million, claimed reductions of around $1.5 million, resulting in reported taxable sales of little more than $500,000 for the audit period. Exhibit D, page 24. Appellant provided limited books and records, such as federal income tax returns and bank statements for 2018 and 2019, and 20 sales invoices claimed to be for February 2020 and April 2020. However, appellant did not provide purchase invoices, sales summary reports, or any other documents of original entry for the audit period. Due to lack of complete sales records, the department could not verify the accuracy of reported amounts. The department's analysis of cost of goods sold per federal income tax return and reported taxable sales per sales and use tax returns revealed negative markup of 69% for 2018 and 2019. Exhibit D, page 28. Negative markup means cost of goods sold were more than the reported taxable sales. The department's analysis of gross receipts for federal income tax returns and reported total sales per sales and use tax return revealed significant unexplained differences. Exhibit D, page 34. Based on the department's analysis, it was determined that appellant's books and records were incomplete, unreliable, and inadequate for sales and use tax purposes. In the absence of reliable and adequate books and records, the department used an indirect audit method to verify the accuracy of reported amounts. The department used markup method to determine unreported taxable sales for the audit period. Due to lack of sales and purchase records, the department estimated a markup of 40%, which it applied to appellant's cost of goods sold of around $1.5 million for 2018 and 2019 to determine audited taxable sales of around $2 million for 2018 and 2019. Appellant reported taxable sales of around $450,000, resulting in unreported taxable sales of $1.6 million and an average error rate of 348%. Exhibit D, page 27. The department applied the average error rate to the reported taxable sales of $500,000 to determine unreported taxable sales of a little more than $1.76 million for second quarter 2018 to second quarter 2020. Appellant did not file sales and use tax returns for third quarter 2020 and fourth quarter 2020. The department calculated appellant's average quarterly taxable sales of $252,000 for the period second quarter 2018 to second quarter 2020 and applied that amount to third quarter 2020 and fourth quarter 2020 to determine unreported taxable sales for those quarters. Exhibit D, page 26. Excuse me. Based on the stated audit procedures, the department determined total unreported taxable sales of around $2.26 million for the audit period. Exhibit D, page 26. When the department is not satisfied with the amount of tax reported by the taxpayer, the department may determine the amount required to be paid based on any information which is in its possession or may come into its possession. In the case of an appeal, the department has a minimal initial burden of showing that its determination was reasonable and rational. Once the department has met its initial burden, the burden of proof shifts to the taxpayer to establish that a result differing from the department's determination is warranted. Unsupported assertions are not sufficient to satisfy a taxpayer's burden of proof. To verify the reasonableness of the audit findings, the department performed an analysis of audit findings based on estimated markup available on the tire industry website, csimarket.com. The department also obtained federal income tax return data for 2020 from its own resources. This analysis, based on the estimated markup from tire industry website and recorded cost of goods sold per federal income tax return for 2018 to 2020, revealed unreported taxable sales of $2.28 million for the audit period, which is higher than the audit findings of $2.26 million. Exhibit G, pages 102 to 104. Department contends that this analysis supports the original audit findings as being reasonable and benefits appellant. Appellant contends that estimated markup of 40% is too high and submitted a worksheet along with 20 sales invoices claiming a markup of 9%. Exhibit E, pages 77 to 97. Despite various requests, appellant failed to provide any supporting purchase invoices, sales work orders, so that the department could verify the accuracy and validity of the sales prices and or purchase prices. Due to the lack of supporting documents, the department rejected the submitted documents as unverifiable, unreliable, and unsupportive of the claimed lower markup. Appellant also contends that the notice of termination was not issued timely. Revenue and Taxation Code Section 6487 states that the department must issue a notice of termination within 3 years of the last day of the calendar month following the quarter period for which the return was due. Here, the quarterly return for second quarter 2018 was due July 31st, 2021. The department issued the notice of termination on July 2, 2021, which is within the applicable 3-year statute of limitation. In response to the Office of Tax Appeals questions regarding the estimated 40% markup, the department determined the estimated markup of 40% based on an internal memorandum from its compliance and outreach program specific to appellant's business. Exhibit D, pages 60 to 69. Excuse me. In an audit examination where a taxpayer fails to provide adequate books and records, as was the case in appellant's audit, the department can use any information to determine the liability. Here, in the internal memorandum, the department's compliance and outreach program provided preliminary figures from appellant's business using a markup of 40% and stated that a more thorough audit was needed. Because appellant did not provide adequate books and records, the department was unable to calculate a more accurate markup. Therefore, the department used the estimated 40% markup. As previously stated, in preparation for the hearing, the department was able to obtain excuse me, appellant's federal income tax return for 2020, and when using information from that federal income tax return, the department calculated an overall markup of 23% for the audit period, which appears to be more accurately reflect appellant's business and appears to be in line with the estimated markup on tire industry website. Based on the foregoing, the department has fully explained the basis for deficiency and proven that the termination was fully reasonable based on the available books and records. Further, the department has used approved audit methods to determine the deficiency and issue timely notice of termination. The department assessed 10% negligence penalty for second quarter 2018 to second quarter 2020. The penalty is based on the fact that appellant's unreported taxable measure is 348% of the reported taxable sales, which is due to negligence in maintaining and providing necessary books and records as required and mandated by Revenue Taxation Code sections 7053 and 7054 and Regulation 1698. Significant high percentage of understatement clearly demonstrates that appellant was negligent in reporting the correct amount of sales tax to the department. In addition, appellant failed to file quarterly sales and use tax return for third quarter 2020 and fourth quarter 2020. The department says 10% failure to file penalty. The understatement cannot be attributed to a bona fide and reasonable belief that the bookkeeping and reporting practices were sufficiently compliant with the requirements of sales and use tax law. Therefore, appellant was negligent in reporting correct taxes and filing sales and use tax returns, and penalties should be upheld. Therefore, based on the evidence presented, the department requests that appellant's appeal be denied. This concludes my presentation, and I'm available to answer any question you may have. Thank you.
Thank you, Mr. Sharma. Judge Lambert, did you have any questions for CDTFA?
I have no questions.
Judge Wong, did you have any questions?
Yeah, I did have a question. Appellant's representative had, this is talking about the books and records that were produced or were not produced, and he had indicated that he had asked the auditor to come in person, but he claimed that the auditor said the supervisor couldn't do that. Could you address that? Like, there seems to be, I was looking at the log of the audit activity, and there's a lot of back and forth between CDTFA and auditor's representative about records, producing records, refusing to produce records, or signing waivers, not signing waivers. Could you address that, please?
Yes. The department has requested the appellant to provide these books and records on various occasions, in person, over the phone calls and everything, including the 20 sales invoices which appellant provided to claim the markup of 9%. But as of now, appellant has not provided any of those records either to the department or to the Office of Tax Appeals to claim that 9% markup. I hope that answers the question, or anything else.
Judge Wong, can I just add something? So, like Mr. Sharma said, we made many requests. We did the information document requests process on multiple levels. We asked for the taxpayer to come to the field office to provide the records. They refused to do so, and they also refused to sign a waiver, and the audit was coming up on statute. So we used the best available information we had at that time, and we had to send the notice of determination at that time. So this was during the height of COVID, so there was a lot of extra precautions in place trying to limit exposure to COVID, but there were methods that auditors were able to use, including scanned copies of invoices, other things like that, or even dropping off records at our office. I hope that helps to clarify.
Thank you. No further questions at this time.
I had a question regarding the 20 invoices that appellant later submitted. Why did CDTFA determine that those invoices were not reliable?
For the department to calculate a shelf test or markup, we need to know the purchase price. So if we don't know, They have only sales invoice. It shows the sales invoice. We need to know when those items are purchased and what kind of documentary evidence they have. So as Mr. Parker stated, in spite of IDRs and many requests, as of now, appellant has not provided any supporting documents or evidence to show where did they come up with those purchase cost or the purchase price.
Mr. Kim, I would like also to add that when you look at the sales invoices, they are undated. There are gaps in the sales invoices that they used. So we are unsure of like whether those truly were the sales prices. If you look at, I'm looking at the Yelp reviews where they actually have some invoices printed out, and they have different numbers for the invoices. Trying to find one here. This is 7/17 of 2018, and it looks like the invoice number appears to be something like 2,275, where the invoices that don't have dates appear to be very similar handwriting. Those all are allegedly from February of 2020, I believe.
2020 and April.
So without the corresponding purchase invoices, the audit staff could not verify that these were actually true and accurate. The other sales invoices have credit card receipts stapled to it, other things like that that would show how we trace those invoices into their actual books and records, which was not provided.
Thank you. Okay, thank you. Before we go on, we will take a short break. So if anyone needs to use the restroom, you can do so. Thank you. Let's meet back in like 5 minutes or 5-10 minutes. Let's say 10:10 a.m. Thank you. We'll go off the record until everyone's back. All right, thanks for bearing with us here. We are going to go back on the record now. Thank you for the presentation, CDTFA. Mr. Craig, you had indicated that you would like to make a closing statement or a rebuttal to CDTFA's presentation.
Yes.
You have 10 minutes, and you may proceed when you're ready.
Okay. One of the things he mentioned were all these numbers, and he had this number, that number, and this number, and he claims, that the records are incomplete. That's why they had to do this. That's why they had to do that. Incomplete. And I explained to you as to why it's incomplete. They chose to make it incomplete by not auditing and not coming out to the field and doing their due diligence and actually auditing the books. You can create any number you want. You can go to any website you want and get any type of gross profit or shelf test amount. They claim 40%. We came up with 9%. And we gave them the paper, the work. We'd scan these invoices they wanted, and we send it to them. But this was all, as we feel, just a setup. It was so they go to their site, CDC site, which is a national site. I've looked at it before. It doesn't really reflect any local small business. And the information, a lot of the information is fed by their own by state's own information. So there's a lot of ambiguity as to how they came up with their numbers. My thing is, this is what's happening. They are avoiding to do sales tax audits. And they're just coming up and want to just do their audits sitting at their desk and expecting my client to scan numerous invoices so that they can justify, and then when we, give them their what they want, they can justify their numbers as to why they had to use their method they used. Their method, 40%, is false. And that's all there is. I mean, it's false, 40%. And all they have is estimates, their estimates, no independence. That's it. Thank you.
Thank you. Just a quick question, Mr. Krega. CDTFA had visited the place of business prior to issuing the notice of determination on March 11th, 2021. Did appellant provide any records, the records that you assert that you have? Did appellant provide those to CDTFA at that time?
He said they visited the premises. I wasn't there.
Okay, well, okay, thank you. And if you were unable to scan the documents, did you deliver the documents to any field office at any
They
time?
didn't ask for delivery or anything like that.
Okay. Okay, thank you. I'm going to see if my panel has any final questions. Judge Lambert, do you have any final questions?
No questions.
And Judge Wong, do you have any questions?
Yeah, I actually have about 3 questions for Mr. Correga. So just to kind of follow up my question to CDTFA about the back and forth about the records, providing records. According to the audit activity notes, it looked like at one point the auditor was willing to set up an appointment for you to take the sales invoices to the CDTFA district office, but that didn't take place. Could you comment on that or why that didn't take place?
They were supposed to come to my office, and later we had an appointment scheduled and everything to go, and then it just says, no, my supervisor doesn't want me to, or I don't know, just something like that.
So there's an entry here. It talks about, I'll just quote it. It's from May 19th, 2021. It's on page 39 of Exhibit D. It says, Mr. Correga told auditor that he wants to bring other documents to the office, comma. Auditor gave available dates and time for the appointment and is awaiting Mr. Correga's response. So it looks like something was in the works for you to bring documents to their office.
That is,
You did not know that.
Yeah, that's new to me. They were supposed to come down for the records because of, when I talked about how we can't scan all these things.
Okay. Because it seems like the auditor was willing to have you or someone bring the records to the looks like the Glendale office, and then they'll do the scanning there.
That was never. I don't remember that ever
Okay.
mentioning it, bringing it to the Glendale office.
Okay. And according to this audit activity sheet, it mentioned that, does your office have a policy of not signing waivers?
Yes.
Okay. Oh, all right. And then my last question goes to the market method that was used. For the cost of goods sold, CDTFA used what was reported in appellant's federal income tax returns. Do you have any problems with those numbers that your client reported on the federal income tax return?
I did not audit that tax return.
Okay, but does your client have a position on what they reported to the Internal Revenue Service?
I don't know what position they have.
Okay.
They
So as
just
you're
reported, yeah.
okay,
I mean, there could be adjustments. I don't know. I mean,
but your client has not revised their federal income
No.
tax filing. Okay.
No.
Okay. No further questions. Thank you.
All right, thank you. This case is now submitted on September 9th, 2025, and the record is now closed. Thank you everyone for participating today. The judges will meet to deliberate this appeal, and we will issue a written opinion within 100 days. Today's hearing in the appeal of A. Flores, DBA Rolling Tires and Wheels No. 1 is now concluded.
Thank you.
OTA is in recess, and the next appeal will begin at approximately 1 p.m. Thank you.